Bristol-Myers Squibb, is it really a great stock? Hi, welcome to Global Value, and in this video, we're going to dive deep into a fundamental analysis of Bristol-Myers Squibb stock, ticker symbol BMY. We will use methods from Warren Buffett, one of the greatest investors of all time. We'll study the key numbers that Buffett values most, and then we'll figure out 3 different prices for Bristol-Myers Squibb to really understand what it's worth in today's market. Stay with me until the end because our final fair value and rating might just surprise you. And there's more. I'll also share a special bonus that could be the deciding factor when adding BMY stock to your portfolio. So is Bristol-Myers Squibb a great chance to make money? Let's find out together. Right now, Bristol-Myers Squibb trades for $51.76 per share. The last year has not been good to investors. Their stock price is down 27%. This is lower than the market, with the S&P 500 up more than 20% at the same time. But there's more for investors. Right now, BMY pays a market-beating big 4.37% dividend yield. Plus, they've grown their dividends 14 years in a row. Can they keep that up? We'll find out. In the last handful of years, Bristol-Myers Squibb stock is up just 3% overall, pretty much flat, way under the market. In the last decade, their stock price is exactly flat. When we go back before the global financial crisis, in the last 19 years, BMY stock has compounded at 4% annually. Their dividends are added to this, and they did beat the market for much of this time, but things have been downhill for their stock price compared to the market since 2018. The burning question is, why should we be paying close attention to Bristol-Myers Squibb? Right now, the company trades just $3 above its 52-week low. This comes as they trade around $24 below their 52-week high. Still, with recent declines in the business, they only have 1.5% of their shares sold short. And how big is Bristol-Myers Squibb? They're huge. They have a $106 billion market cap, plus they use some debt, so they have a $137 billion enterprise value. Now, what does the company actually do? Bristol-Myers Squibb discovers, develops, and markets drugs for various therapeutic areas, such as cardiovascular, cancer, and immune disorders. A key focus for Bristol is immuno-oncology, where the firm is a leader in drug development. Bristol derives close to 70% of total sales from the United States, showing a higher dependence on the US market than most of its peers. Bristol-Myers made 2 big acquisitions recently. They bought Rayze Bio for $4.1 billion at the end of December 2023. This comes less than a week after they announced the $14 billion acquisition of Karuna Therapeutics. They're using room in their balance sheet to bring in new drug innovation as they face patent loss protection on key therapies later in the decade. Now, with that understanding, let's dive deep into the numbers that Warren Buffett cares about. This step-by-step checklist-style approach reverse engineers how Warren Buffett would look at a company's numbers. It gives you one of the best shots of finding undervalued, high-quality stocks that can beat the market and make you a lot of money in the process. Getting started on metric number 1, we want their average return on capital to be above 14%. This helps us understand how much they're making for all the money invested into Bristol-Myers Squibb. The average business earns around 7% returns on capital. When we look for a benchmark double this, we can build in margin of safety based on the quality of the company. Plus, over the long run, most stock returns are around their return on capital numbers. Bristol-Myers Squibb saw their returns on capital decline as they added way more capital to their business with their Celgene acquisition, which they announced in 2019. As they merged the 2 companies, their returns have increased again. When they're averaged out, Bristol-Myers Squibb earns 11.7% returns on capital in a given year over this time. That's just slightly below our benchmark. It is an X, even though it's above average. Look for this to potentially improve in the future. In our next metric, we want growth in their sales, earnings, and free cash flows. Simply put, it's harder to make mistakes investing into high-quality growing companies. In this time, with their Celgene acquisition, Bristol-Myers has doubled their sales. Their earnings have grown by 68% up until today. These earnings were negative in 2020 as the company took $12 billion in charges in in-process R&D expenses. With that acquisition, that was a one-time occurrence. Importantly, the company's free cash flows have also grown by 91%. Acquiring Celgene has added a lot of firepower to the business. All 3 of these are up. It's a check on metric number 2. In our third metric, we want earnings per share growth. This looks at Bristol-Myers Squibb from the view of an individual shareholder. It can help tell us if they're creating value or not for shareholders. For each share, they earned $3.01 in 2018 and $2.95 in 2022. Thankfully for shareholders, this has grown in 2023. In their last 12 months, they earned $3.94. That's growth, which means it's a check on our third metric. Still, over this time for their Celgene acquisition, Bristol-Myers Squibb diluted shareholders by 28%. They've been buying back shares since 2020, but that's something to keep in mind. Our next metric is similar but even more important. Free cash flows are the lifeblood of any business. They're ultimately how most companies are valued. In fact, we'll use 3 different methods later in the video to estimate what Bristol-Myers Squibb is worth using their free cash flows, so stay tuned. In this time, their free cash flows have grown, especially since the Celgene acquisition. In their last 12 months, they brought in $5.49 of free cash flow for each share that they had outstanding. It's another check on metric number 4. So far, BMY has 3 checks and only 1 X through 4 metrics. That's pretty good. Before we look at the company's debt and figure out what they're worth, why don't we check in on our bonus? Right now, Bristol-Myers Squibb pays a market-beating big 4.37% dividend yield. Plus, they've grown this in each of the last 14 years. But can this keep growing, and is it sustainable going into the future? That's why in our bonus, we want their dividends to be covered by their free cash flows. This is the case in all 5 of these years. Bristol-Myers Squibb has modestly grown their dividends, while at the same time growing their free cash flows even faster than this. Plus, they've covered them in all 5 years and in their last 12 months. With dividend growth in their last 14 years that's been supported recently, it looks like Bristol-Myers Squibb may potentially be a dividend aristocrat one day. This may be an interesting dividend growth stock. Now, great businesses are able to earn high returns and grow without using a lot of debt. In fact, in recessions, it's businesses with too much debt that can have the biggest losses and even go bankrupt. You don't want to invest into broke companies. So we want their net debt to be below the sum of their free cash flow. Bristol-Myers Squibb has added debt in this time primarily for their Celgene acquisition. Their debt levels have swung around a bit since 2019, yet today they sit at $31 billion. Again, the company added quite a bit of capital to their business for that Celgene acquisition, both raising debt and issuing shares. Still, with the fire hose of free cash flows, it looks like it's pretty decent for the business, even if that's not reflected in their stock so far. Bristol-Myers Squibb is able to cover their $31 billion in net debt by having $54 billion of free cash flows in their last 5 years. These have more than doubled in this time, and they're especially up big after their Celgene acquisition. It's exactly what we want to see with the check on metric number 5. Now, how much are they possibly worth? Number 6, the big metric of them all, we want their average free cash flow yield to be above 5%. This estimates what a stock would be worth when an average of its free cash flows over the last 5 years is divided by its enterprise value. Enterprise value looks at Bristol-Myers Squibb more like it's a private company by adding their market cap and net debt together. Right now, this comes in at $137 billion. They're a big company. In an average year over this time, BMY brings in $10.8 billion. When we divide that by their enterprise value, it gives us a 7.9% average free cash flow yield. That's above what we were looking for. And today, they brought in $11.7 billion in their last 12 months. When that's divided by their enterprise value, it gives us an 8.5% current free cash flow yield. These both look like they offer that risk premium we wanted. It's a check on our 6th metric. But don't run out and go buy the business. Use common sense and do what's right for you personally. Plus, this is just the first of our estimates. Stay for the next 2 before we put these together and add a rating at the end. Everything we've covered so far is important, but there's still something missing. This takes us to a DCF valuation as our second estimate. Here, we'll use an average of their last 3 years of free cash flows, then grow these into the future using their historical numbers. Plus, we'll add in their tangible book value to estimate their net worth. Do your homework and figure out if these assumptions are accurate or not. If we assume they grow their average free cash flows at 6% in each of the next 10 years, then in the following decade, we'll assume that these decline and only grow at 3% annually. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for, Bristol-Myers Squibb's fair value is around $41 per share at today's current multiples. Keep in mind they've been pretty predictable in their past and they trade way below their historical valuations. Right now they trade for 9.5 times price to owner earnings, when in the last 10 years they've traded for around 24 times. They're also below their historical EV to free cash flow numbers. And most basic, they're trading just above their minimum PE ratio in the last decade. We'll take their Guru Focus value as our third estimate, which comes in at $72 with a modestly undervalued rating. This uses analyst estimates, historical valuations, and an adjustment for past returns. A valuation chart shows that they look pretty good on most models. Now, we've looked at most of the numbers Warren Buffett cares about, but it's the qualities of a business that are even more important to him. Why don't we learn what these are for Bristol-Myers Squibb so we can combine them with our estimates and give them a fair value? Let's start with a long thesis first. Number 1, Bristol is launching several new cancer and immunology drugs that can have high sales trajectories given the high unmet medical need. Number 2, oncology drug Opdivo holds the potential to radically shift the treatment paradigm in several cancer indications. This could result in peak sales of more than $10 billion. Number 3, the majority of Bristol-Myers Squibb late-stage pipeline focuses on rare diseases, immunology, and cancer, places where the Food and Drug Administration aggressively approves drugs and typically holds strong pricing power. But it's not all positives for the business. Let's look at a short thesis as well. Number 1, the acquisition of Celgene brought generic competition for cancer drug Revlimid in 2022, setting up a major growth obstacle over several years given the planned staggered generic entry. Number 2, Bristol faces one of the larger patent cliffs by 2028, when cancer drug Opdivo and cardiovascular drug Eliquis likely face heavy generic competition. Number 3, the Celgene acquisition added significant debt that could become challenging to repay if competition strengthens against key drugs or pricing pressures intensify in the United States. That's part of why the company's been so active in their deal making. They announced 3 acquisitions in 2023 for around $23 billion in total, nearly a quarter of their market cap alongside biotech and pharma deal making. Now, this far in our stock analysis of Bristol-Myers Squibb, stock ticker BMY, we learned they go 5 for 6 on our Select 6 analysis. The company's returns are starting to rebound after they added a lot of capital for their Celgene acquisition, but that's led to big growth, and right now they have enough cash flow to comfortably support their debt, even if they face a big patent cliff in the future. It also looks like the company may trade attractively. Right now, these 5 super investors own Bristol-Myers Squibb stock. The biggest position is from Kahn Brothers with 7.7% of their portfolio invested in the company. Warren Buffett used to have an investment as part of a broader basket bet on pharmacy stocks. He bought in at the end of 2020 and started selling through much of 2021. Based on their share price, he made a little bit of money from this position, but not too much. Keep in mind, this analysis isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. When we combine their qualities and our estimates together, right now, a fair value for Bristol-Myers Squibb is around $58. Fair value is a range on either side of this number. It comes in $7 above their current stock price and just $3 below their street target price. It looks like Bristol-Myers Squibb is just slightly undervalued. If you enjoyed today's BMY stock analysis, like it, share your thoughts in the comments, subscribe to the channel for more, and watch this next video. You may enjoy it too.